So we're going to go through liquidity now and how to go about identifying them. In simple terms, liquidity is just an area where there's stop losses and pending orders. Essentially, we are all liquidity in the market, guys. However, that does not necessarily mean all orders in the market must be liquidated, as some areas are simply not as liquid as others. There are three most common areas of liquidity that you must be familiar with. And we're going to start with equal highs and equal lows. That could be as an act of double tops, double bottoms, or support and resistance. Okay, trend lines, you got your channels, those could be an act of liquidity. And funny enough, some supply and demand zones can come across as an area of liquidity, especially if they are not within some discounted or premium levels. Now let me show you guys examples of what that looks like. So here we got a formation of some double tops where price creates highs at the same level. This creates an area of liquidity. We call that a double top. Vice versa for a bear market. So here we have a formation of a double bottom where retail traders would form this as an area of support. So if price retests this point again, they will look to execute buy orders from. However, in my perspective, that is an area of liquidity. Same thing for a trend line. When price respects a channel, that forms a trend line. So when price comes back to retest that trend line, people would enter some shorts from that level. That is an act of liquidity, and so on and so forth. In this example right here is an example of an area of supply and demand being an act of liquidity. So you guys already know because we've been through what discounted and premium levels are. Now, if you have two levels like this being zone A, this being zone B. If you fib up the high and the low, zone A aligns with the 50% of our price range. What do we know about the 50% level? It isn't an area where we will be looking to buy or short from. Okay, so this area is most likely going to entice early sellers in the market. So basic retail traders will buy in from this continuation zone, not anticipating this more premium level. Okay, so this will induce early sellers into the market. So we can expect price to take those early sellers out and come into the more premium level. And same goes for this area over here. We got zone A and zone B. If we flip up the low to the high, zone A aligns with the 50% of the price range. Once again, this isn't a level we would want to be buying in from. So we would expect price to induce all of the early buyers in the market and come deeper into the more discounted level. So this is a chart example of an equal high formation right over here. So you guys can see that there was a double top forming at this point right here. Rather than price retesting and reacting from that point, price ends up rallying over to the upside, getting into some more premium levels, and then shorting right after. All of those retail traders that shorted from this previous level of support or at this double top would have been liquidated. Okay, this example is of a bullish trend line. Price was reacting from this trend line once, twice, three times, four times. When price came back to test this point again, retail traders were entering buy positions from this point. What ended up happening? Price completely sold off, liquidating all of the buyers at this area of at this trend line right over here, and it ends up reversing back over to the upside. Okay, next we got an example of a supply and demand being a form of liquidity. In this case, it is demand. We got price rallying over to the upside. Okay, we got zone A over here and we got zone B over here. Now I'm pretty sure if we flip up the swing low to the swing high, zone A aligns with the 50% of that price range. Now that we know this isn't an area where we would want to execute from. We want price to dip into some more discounted levels, as that's where we want more of the volume to step in. So when price is pulling back into this area, it is inducing and enticing early buyers to step in at this continuation level. And what happened right over here, it excited them. It was like, all right, cool, you guys are now in profit. And then it crashes, taking all those stop losses out at this area of demand, coming down into this more discounted level, and then we saw the rally over to the upside. Okay, so those are the three examples of equal highs, trendline liquidity, and supply and demand being liquidity. I'm going to go ahead and show you guys some chart examples of how we would go about trading this. Okay, so this example is pound Australian dollar. Now, what can we see right over here? Price has created a form of double top, as you guys can see. Okay, this double top has now been formed. What does that tell us? Now that we understand that this is a level of liquidity, price will not hold and continue to sell off. Price must come up to take out all sell orders at these highs over here. So now that we have that in the back of our mind, we know price is going to sweep that level. Now we look for areas where we can expect it to actually reject from, and then we can capitalize on the move over to the downside. So normal retail traders would have extended this as a level of, sorry, let me get rid of that and just extend this. Normal retail traders would have extended this level and taken short positions on the retest of this point, targeting, let's just say, these lows, okay? However, what ends up happening to those traders, you will see now, price ends up liquidating them. We would have hit stop loss if we entered at this level of resistance. Price ends up coming into some deeper levels. Now, if I take out my Fibonacci tool and I just swing it from the high into this low, you can see price actually pulled up deeper into that 70.5 and that 79 premium level that we are interested in. And funny enough, what aligns within these levels is this very nice area of supply that we have right over here. We have that rally, that base, and then that drop, which took out this low. Okay, so we have a very nice reversal zone, which also has this liquidity resting right below it. So now that we anticipate for price to rally over to the upside to take out this level, we identify some areas of supply within our premium levels, and that's what we found right here on the 4-hour. What do we end up doing? We end up executing our short with our stops at the level of supply. If I just refine that properly to the wick, with our stop loss like this, and we'll be looking to target the lows. Okay, now this is a more probable level with all of the confluences that we need to execute. And as we play price, you see we finally hit take profit. Very simple and textbook analysis. Next up, we got the pound Australian dollar. Now, what can we see happen at this point over here? Price has reacted once, twice, and 3 times of this trend line right over here. Now, if we extend that, what do we expect retail traders or even some supply and demand traders to do? Now that people have identified this level of trend line over here, we can expect a lot of retail traders to want to buy in at the retest of that level that we have marked out. Okay, looking to target these heights, for example. Not only do we have this level of trend line over here, there's also some form of demand, these lows, which aligns with this trend line. Okay, this is 2 areas of liquidity in one spot. We've got an area of demand that is an act of liquidity, and that trend line, which is another act of liquidity. So there's 2 reasons why price should completely liquidate this point and come down into some more discounted levels. What ends up happening to those buyers in the market? Let's find out now. And just like that, price ends up liquidating all of the retail traders that bought in at this trend line and bought in from this level of demand. Price dips even lower after liquidating this level. And what do we have here resting within the discounted region? We have this very nice area of demand. This is a more discounted level, and it is right below all of this liquidity. So now that price has swept and taken out all of the early buyers that stepped in from this area over here, we can now expect price to reverse. So we market execute our buys with our stops at the low of the demand, and we can look to target the previous high. And let's see what happens. And just like that, we hit our take profit. So that is how we trade with liquidity. I'm going to show you guys one more example on the euro dollar. Now we're looking at the euro dollar. Okay, this is the swing low, this is the swing high of this price range. So we fib it up from the low into the high. Now that we've done that, we have identified 2 areas of demand that we can potentially look to execute some orders from. We have this area of demand that aligns with the 50%, and we have this area of demand that aligns with the 70.5 to 79%. Which is the more probable level? Obviously, the area within the more discounted region. So this area of demand is only enticing early buyers into the market, which will eventually be an act of liquidity. So retail traders would have stepped in at this continuation, and let's see what ends up happening to them. And as you guys can see, price completely ends up liquidating them and coming for their stop loss. Now that this area is completely invalidated, this area is more probable. So we'll be looking to execute our order from this level of demand, as it is the more probable level and it is the more discounted region. We'll also be looking to target that same high. Let's see if we end up getting tapped into. Just like that, price mitigates the more discounted level, which aligns very nicely with that 70.5%. and we begin to make the move over to the upside and finally hitting our take profit. So those are the three examples trading the three different liquidity concepts. First one being the equal highs, price took out the equal high, tapped into our more premium level of supply, and it sold off. This case right over here, we had that trend line liquidity. Price ends up liquidating that trend line liquidity, tapping into this discounted area of demand where price began to make the move over to the upside. In this case over here, we had this continuation level of demand, which enticed early buyers into the market. Price ends up liquidating those early buyers, coming down into some more discounted levels, which aligned with the 70.5%. That's where we look to execute our buy position. That's when price began to make the move over. Okay, so that is the liquidity lesson done, and I'll see you guys in the next lesson.